Fiverr and Upwork are two gig economy stocks that have been under pressure because of the rising effectiveness of artificial intelligence and investor concerns that the clients on the platform would use AI instead of going and hiring people on these gig economy platforms. So the first thing I wanted to compare these two across is on revenue growth going back several years. And Upwork has increased its revenue from 164 million in 2016 to 773 million in the most recent trailing 12-month period. The company's revenue growth over the last year has been less than what Fiverr has generated in the last year, and also less than what Fiverr has generated over the previous 8 or 9 years. So Upwork's revenue growth rate in this time is good for a compounded annual rate of 20%, while Fiverr's growth rate from 52 million to 419 million is good for a compounded annual growth rate of 32%. So Fiverr's growing its revenue much quicker than Upwork. Fiverr caters to smaller businesses, while Upwork caters to some larger buyers of services, some companies that like to hire in bulk or do more in between, where they're hiring gig economy workers, but they're also kind of onboarding people. So it's kind of an in-between thing. Upwork is more like that, whereas Fiverr focuses more on specific smaller size transactions. Each of them has been increasing the transaction fee they're charging. And as if you've been following my channel, you'll know I like these platform type business models where these businesses don't own anything. They don't own any, or they don't partake in any of the labor and human resource challenges of hiring an employee full time. They just operate the platform that brings together gig economy workers and those folks that want to hire gig economy workers. Similar to how Uber, Lyft, DoorDash, Airbnb, eBay, etc. operate that platform business model. They don't own anything. They just bring together two sides of a transaction and take a fee from transactions on the platform. I like that business model. It's been lucrative across industries, and Upwork and Fiverr operate on that business model, which is one of the things that attracted me to them in the first place. So the next thing I wanted to compare these two on is the return on invested capital. And in the last few years, Upwork has done a great job in boosting this metric. For the longest time, between 2018 and 22, they had been getting worse, right? So negative 4.9% to negative 27%. So that whole time I did not have Upwork rated as a buy. Click the link below to watch the full video.